Hello, everyone, and welcome to the next edition of the speaker series here at Ball State Center for Professional Selling. I'm your host, Deva Rangarajan, and today we have a repeat guest. We have Sven DeLabey from Simon-Kucher Partners from the Brussels office in Belgium. So, Sven, thank you again for taking the time to talk to me and our audience.
Yeah, hi Deva.
Sven, one of the things the last time we were talking about how to deal with the pandemic, and we were talking about how to go about trying to deal with pricing and what role should salespeople play in trying to communicate the value to the customers about the pricing increases or the variations in the pricing models, right? But one of the things that we did not touch upon then, and that is something that is a hot topic, and not just because of COVID, but also because of the kind of trend happening in the business place about changing business models. So I just thought I would pick your brains, which is quite considerable, by the way, in terms of saying, okay, how can we try and understand and grasp this idea of subscription-based models? So let me actually begin for the sake of the audience who might not be familiar with the term subscription-based models. According to you, what are subscription-based models?
For me, this is any model that replaces a one-off purchase, right? So, I mean, in heavy industry, you would have very big machinery that at some point you have to sell, and then there is a big tender, and it's a capex investment. Replacing that by a model where the asset is leased in an OPEX model, for instance, would be a switch from a traditional revenue model to a more subscription-based model.
Indeed. But it's very interesting, right? Because people make a big deal of it right now, but Xerox has been doing it for a long time, right? Except that everybody is catching on to the bandwagon, correct?
Exactly, and if you think about newspapers, magazines, this has been a traditional subscription business for the last decades.
Indeed, right? And my personal favorite, gyms, which of course I don't go to, but still I end up paying a lot of subscription fees. No, but why is it that, okay, one of the reasons you said capital equipment, right? So it sort of makes sense, right? You create a product, and essentially, typically when you have a very good reputation, the product is typically engineered to last for 20, 30 years. So essentially you might as well forget all the kind of revenue you want to make with it. So it sort of makes sense there. But you also have these new born in the cloud companies, which are also moving towards like things like SaaS, right? Essentially software as a service kind of things, or platform as a service. So why is that we see this more and more of this trend happening right now?
Well, let's say one of the obvious reasons is also that if you force a customer to make a very high investment, a customer will be much more skeptical, will look at much more alternatives, will set up a very long purchasing cycle with many decision points to then make the decision on the supplier. If you manage to turn this one-off selling model into a more recurring model, very often you can, I would not say bypass, but you can influence heavily this purchasing process by showing that actually the revenue is acquired much more over the lifetime of the asset. And so we very often call this aligned revenue models, where a supplier starts to make revenue at a moment when the customer is also making revenue. And if you think about that, it's much easier to sell this type of solutions. And because why would you force a customer to make the investment today, knowing that it would still bring value in, as you mentioned, 20 years time, right? So
indeed,
if you align that, a customer would also start to realize that there is a better relation between their cost, but also the income they actually make on top of that.
It's very interesting, because essentially what you're trying to say is one way of trying to avoid the dreaded purchaser or procurement is who's focusing on the big capital equipment, capex kind of deals. So essentially what you're trying to say is that you're trying to appeal to the CFO and everybody else by saying that, okay, you know what, there's going to be a more predictable outflow of cash rather than one big upfront kind of purchase. Am I correct as well, that it's one effective way of trying to neutralize like the purchasing department?
Yeah, absolutely. And also to have a better value communication almost.
Indeed.
I have this one example where a tire company
Mm,
had an innovation,
mm,
a tire that lasted, I think, 20% longer.
mm,
Uh, and when they asked the R&D department about what would be the price, the premium we could
mm,
charge for that 20% additional mileage, they estimated 5%, maybe 10%, but then you don't monetize that full 20%.
mm,
So what the company did is basically saying, look, we're not going to sell you tires like we used to sell them.
mm,
It's no longer a one-off purchase.
mm.
We are going to invoice you per kilometer
Right.
that your truck has driven.
Yeah.
And you know, when a truck is driving, your customer is making money.
Indeed.
So part of that money could then be, let's say, invoiced by
Yeah.
means of a price per kilometer on the tire. And the additional benefit is that if the tire really lasts 20% longer, you will monetize that full 20%.
Indeed.
So you actually come with almost a no cure, no pay model,
Yeah.
which is very hard for a purchasing department to also scrutinize, because if you don't live up to that promise, you don't get paid.
Indeed. Yeah, but I think there's also another interesting thing when we talk about this, because you're also tying in the customer, right? Because it is not just so, of course, you can always say that, yeah, you're going to have as long as they're using it and then you're able to deliver on your value, but you're also keeping track of how the customer is using it. I can also imagine values to you beyond just ease of trying to sell or ease of trying to convince the value to the customer, because you're also tying up the customer because you are in touch. So when something bad happens or you need to fix it, you're out there so that the customer gets a seamless service. So it's just natural that the customer gets tied to you. That is one aspect of it. But you're also getting customer feedback without the customer themselves explicitly saying, but you're actually getting feedback in whatever way possible about the product or the solution that you have, correct? So essentially what you're talking about, you're improving your processes as well along the way, yeah?
Yes, and I think that's also a key point. In a CapEx model where you sell
Yeah.
one asset, be it a software, be it a machine, whatever, the sales mindset is very much into we sell it
Yeah.
and we go on to the next deal, right?
Yeah.
In a model where you have a recurring revenue, you actually have to maintain a certain
Yeah.
relationship with that
Yeah.
customer,
Yeah.
but also linked to that, you have the benefit of starting to collect data
Yeah.
that otherwise you would never have acquired. And
Mm.
maybe to give you one example on that, a company selling big cranes and earth movers. Traditionally, this is a capex model, right?
Yeah.
I mean,
Indeed. You buy a piece of it. Indeed, exactly. Yeah.
you try to sell a bunch of machines
Yeah.
that are then placed all over the world, and you hope to see that customer back in 4 to 5 years.
Yeah.
And in the meantime, you try to sell some spare parts.
Yeah.
That's the traditional model. If you then think about a completely new way of running this business, you could actually decide to have a kind of pay per move model. So
Yeah.
whenever the crane is moving,
Yeah.
you would acquire revenue, because again, that means that typically that customer is also making money, right?
Absolutely.
So
Yeah.
when the crane arm is moving, you would get somehow some
Mm.
money as a supplier. At the same time, you could also plug all kinds of sensors into that machine.
Indeed.
And you could actually say, well, I as a supplier, I continue to own this machine, and you lease it and you only pay if you are moving earth.
Yeah.
At the same time, since I own the machine, I also own the data that this machine generates. So I will know at all times where the
Yeah.
machine is on the earth. I will know how much work it has done, how many movements it has done. And if I collect that information for a sufficient amount of earth movers, I can start to do predictive analytics.
Indeed.
So which crane around the world has done a certain type of movements that typically puts a certain strain on this component, which probably triggers a need to replace the part.
Indeed.
And knowing this data, I can actually go to my customers and say, well, you have a crane somewhere in South America that in the next 5 weeks will probably need the following spare parts. no worries, I have shipped them already to you, and we will come and install them or explain you how to do that.
Indeed.
So you augment the customer experience. You lock in the customer. You try to avoid a big one-off decision when there is a CapEx decision to be made. And at the same time, you lock in the sales of spare parts against aftermarket competitors.
Absolutely. Now, here is pretty much what it is, because you talked about the sales organization, right? Because before you even get into the sales organization, when we start moving into this, right, the ability, salespeople today, we all know that are pretty much, I'm not just talking about COVID, I'm talking about even before that. Salespeople today are more busy than ever. If you go around the world, almost, I'm sure that almost every firm has an undersized sales force, right? Very few firms actually have any kind of fat or, slack in the sales organization. So this calls for the fact that when I go in and try to talk about these kind of subscription-based models, suddenly, if you thought that Gartner's number, that 6.8 people in the customer's decision-making unit, I'm sure that there are going to be more people involved, because now suddenly there are more moving parameters. You need to get input from so many other people. You need to convince a lot more people than what you had to do in traditional days. So my question here is, to what extent, when an organization, I'm not talking about born in the cloud kind of companies, I'm talking about traditional organizations which are moving towards this kind of subscription-based models and stuff like that. To what extent do companies underestimate the role of marketing to help the sales organization gather information about the different stakeholders and help them coming up with the right kind of content?
Well, I think if we talk about recurring revenue models, I think it's even more important for a marketing department to emphasize the lifetime value of such an asset, right? So it would somehow also be the role of marketing to defend a certain revenue model behind behind the recurring revenue model that we're trying to set up. Think about, for instance, the tire example with the 20% higher mileage. Here, there would be a strong marketing support required to really sell that revenue model, meaning that you don't only limit yourself to highlighting the benefits of the tire, focusing on the 20% mileage, but you would also focus on the benefits of the revenue model behind, mentioning very clearly that there is an aligned revenue model. So what are the benefits of an aligned revenue model? We make money when the customer makes money. And so it goes much, much further than just advertising the product.
Indeed. And I think that's what is, in my opinion, that's what many companies underestimate, right? The fact is that they want to move towards this, and you ask them, first of all, they expect their salespeople who are pretty much selling the product right now to automatically change their mindset and move towards this way of selling, not understanding that they might actually need support. Not that they cannot figure it out, but they just don't have the time to figure it out. They don't have the collateral. They cannot be out there trying to come up with, PowerPoint decks saying that these are the values and stuff like that. And for me, that is one of the things that I find that never before has there been a need for marketing to truly live up to what marketing is. That is product, price, place, promotion, people, process, all these kind of things. And call it whatever you want. But the idea is that we have to factor all this in and help our salespeople become successful, correct?
Yeah, absolutely. And it's exactly that. You still need to sell the product. You still need to emphasize the value of the product, but you also need to emphasize the innovativeness and the benefits of the revenue model, of the additional features, the benefit of, let's say, a longer term relationship. Because as a supplier, you would say, of course, we do this to create a certain customer lock-in, but that's a very negative way of saying that actually you want to have a longer-term relationship with a customer, where actually you also take a certain risk in many cases, right? Because blind revenue
absolutely
also means revenue loss when your customer is losing revenue. So there is a role in marketing and sales management to not only defend the value of the product or the services around it, but also the revenue model and the intrinsic risk taking that could actually be a part.
It's an excellent point that you mentioned, because the risk taking is something, because in the past it was either you taking the risk, which is completely no cure, no pay, or you would pretty much go in and the customer takes all the risk, saying that, hey, I promise you this product is going to give you so much value. So the customer takes the risk. The customer pushes no cure, no pay towards that kind of model. But right now we're talking about a shared risk model, right? And I think, in my opinion, based on what you're saying, my takeaway from this could be that marketing can also play a very important role in customer vetting, right? Because you cannot just go offering every kind of solution to every kind of customer, because some customers might not be in a position to be able to afford it. Some customers might have deep pockets where they say, you know what, we're going to do everything ourselves. So I'm actually thinking that from what you're saying as well is that marketing can go into traditional, what we say, segmentation, but looking at maybe newer ways of segmenting, like lifetime value of the customer or potential risk the customer has, because this is a risk sharing model, correct?
Yes, and you don't want to apply it to every customer, right?
Indeed, right? Indeed.
A kind of segmentation. Again, taking the example of a truck tire, you don't want to offer that to companies having only one truck.
Yeah.
So you want to have certain revenue models and even, let's say, recurring business models that you would allocate only to key accounts, very promising customers.
Yeah.
Whereas on the long tail, let's say maybe the smaller customers, the less loyal customers, maybe you want to have a different revenue model. So there is also a whole work to be done in which type of risk sharing models versus more safer revenue models do we apply to which customer segments. Yeah,
absolutely. I mean, that's what is right, because you said it beautifully, because you said marketing and sales management, because I'm assuming from your experience in most organizations where if you don't have a marketing department that does all this, then it's the sales managers who have to understand this and start allocating customers or territory management, saying that you should be, for these customers, you should be doing it this way. For these customers, you should be pushing it that way, correct? Am I understanding it right?
Yeah, and I think a sales manager also has a role to play in a recurring revenue model. So it's not about signing the contract and having the revenue inflow for the next 20 years. There is also some work to be done there. And it's a different role than the marketing role, I would say. As a salesperson, you can still sell, even though it's a recurring model. And this is related to the topic of upselling and downselling, which in subscription models you very often have. Think about the good, better, best, the premium, the pro, etc. So some customers at some point will need additional services that then later on are no longer required, right? So you need, when you have this kind of recurring revenue model, you need to be sure that you can adapt the content of that model, the products, the services that you give to the needs of the customer. And you need to be very clear on how can I upsell that offering when I can, and how can I downsell it when I need to. Think about the B2B company. Let's say the earth movers, maybe in South America, they need additional services because it's a very complex project. So ideally, as the manufacturer, you are then able to enable different services for a certain period of time, which increases the revenue inflow for you as a manufacturer, but at the same time also increases the services and the value added for the crane operators.
Absolutely.
And of course, after a couple of weeks, you don't need that anymore, so you want to downsell again. That's also the whole idea of making money when a customer is making money.
Indeed. I like this, because for me, but some companies have the benefit of saying, I have very specific salespeople for doing certain things. I have specific salespeople for doing certain things. But if you're there in a country like Belgium, which is very small, for example, that you cannot afford to have a separate sales force to sell specific service, high product services, or you know what I mean, that you're going to get the same person talking to a different strata of customers. And I think that's pretty much where, in my personal opinion, that sales managers have to play a very, very important role in coaching their salespeople about saying to what customer should I be doing this, what customer should I be doing slightly different models. And for me, that is the whole aspect of how you try and do this. Let me ask you this question, Sven. Do you think that these kind of models, subscription revenue-based models, recurring revenue models, can they be sold through e-commerce? because there's more talk more and more. If you take a look at every day, you get these notifications from different consulting organizations that talk about how because of COVID, a lot of customers are changing the way they buy and stuff like that. So do you think that there is a chance for even these kind of subscription-based models, not the high-end ones, I'm talking about recurring revenues, that kind of stuff where you do it, that you don't need a salesperson doing it. It actually can be done through e-commerce.
Yes, but I would not say that you no longer need a salesperson. So it can definitely be a first touch point. And we actually see B2B companies today already have an online offer. In the very same way that you would see that on a Spotify or any B2C website that today has a kind of subscription-based model, typically offers their services in packages, right? Value packages linked to a certain price point. And already by positioning your offer in value packages, in a kind of versioning, as we call it, you trigger a self-selection on the customer side.
Absolutely, yeah.
So they would look at what are the attributes that I get, what is the price point, and they make a certain choice. And then you have all kinds of behavioral pricing tactics, like people go for the middle option, etc. Right? So all these tactics are today being also increasingly applied in B2B.
Yeah.
So we are actually supporting B2B companies to do exactly that. How can I make an e-commerce offer where I have a couple of value packages that are linked to a certain price point? And do I have the right upsell, downsell paths? Can I create a long-term relationship? How do I introduce paywalls? Should I work with a freemium model? All these ideas that originally came from B2C are now also finding their way to B2B offers. And of course, not earth movers and big investments, right? Yeah. But I mean, typically when the ticket is sufficiently low and there is not a huge tendering process required, you would actually find these models already today.
Unless, of course, it's going to be repeat purchasing, right? Unless there's going to be, hey, I've done this and then I want one. Because usually that's what we would find, right? Either you go with the low-end customers or the really high-end customers who say, hey, 100% of my share of wallet is with you guys or girls. And from that perspective, whatever we do is once you buy from us, you know what you're looking for. There's no necessary need for a touch point. Doesn't mean that I will not go in and check if things are going well. Right? And so from that viewpoint, but actually that raises a very interesting point. Not that we see it in B2C, but you do have it in certain B2C, this role of customer success, right? That touch point need not be a salesperson, right? It could be a customer success, especially in subscription models, where you have to constantly remind the customer the value, because as you said, the customer is realizing value every time that they use it, correct? So which means that you cannot expect your salesperson to be there all the time, but you could have a customer success person who can actually monitor what's happening and go tell the customer what that value is. Would you also look at it from the viewpoint of a touch point, which can seamlessly work with the sales organization?
Yeah, so let's say the role of a salesperson in this type of environment, an e-commerce supported environment, would still be to be present for the customer whenever they require it, knowing, of course, that in an e-commerce model, a customer gets access to what I would call self-service. So I have my offer every month. I pay for that every month. If certain aspects I need on top or I don't need any longer, I can switch my subscription myself in a very B2C way. And maybe in the past you would call a salesperson to deactivate certain elements or activate certain other aspects. I think the administrative part there can be fully automated in a kind of subscription configuration module. At the same time, an organization can still collect in a very let's say periodical way customer feedback to understand what is the overall appreciation of the offer, and then selectively a customer success manager, a customer engagement manager, a sales manager can then contact companies where there might be concerns. And so indeed, it makes it possible to, I think, share a little bit the customer relationship without giving that same customer the feeling that he's being approached by 5-6 different people of the same company. Maybe happened in the past.
And the key is that, of course, you have to manage this very carefully, because at least in the case of a customer success, it comes post-sale, right? the idea is that it could be that organizations can try and take a look at it from the viewpoint of, if I'm buying from 4 different business units of a supplier, customer success working in tandem with a key account manager, assuming that the supplier realizes that's a key account, can actually benefit a lot, because the customer success is going to be much more proactive, whereas a key account manager might periodically go in, they might not even have the knowledge sometimes to go in. And if I were to listen to all the sales managers and key account managers I have a chance to talk to, whose frustration is every time I have to go talk to a customer, it takes me 3 hours to prepare one pager about what we're doing with the customer. Having a customer success person can actually help you not just keep the customers proactively serviced, but it can also help kind of having that open channel of communication, which makes it easier for your key account manager to jump in whenever necessary and have access to information without wasting time. Would you think that this could be a benefit as well?
Yeah, absolutely. And I think as a key account manager, sometimes with the best intentions, you want to get in touch with a certain customer, but then suddenly an urgency pops up and you are diverted to another activity. So I think, separating that, especially in larger companies, makes a lot of sense.
Indeed. So I'm going to come to the last part of what it is. I'm sure this is something we can talk for days on end, because it's so interesting, the concept of move towards subscription models. I'm more interested specifically in the pricing part of it, especially for organizations that have come from very traditional ways of pricing. So one of the things you talked about was price bundling, right? So how would I transition into the process? I don't want to exactly bother you with but how do I transition from a traditional pricing model based on products to now moving towards pricing on value-added services, actually?
Yeah. That's a difficult one, especially if you're a stock quoted company and you have your quarterly earnings report. Because obviously, if you go from capex to opex on, let's say, one of your core products, you will risk to have a revenue drop. Because you don't get the full tickets. That full ticket still comes in, but over a longer period of time. So there is some explaining to be done to investors about what is happening. I think at the same time, if you really want to monetize innovations, this is the only way to do. So there is this communication to be done, and it's also to be prepared from the inside. Because if you go on a core product to fully recurring revenue, there will be this drop that will be compensated over time, but in the beginning there will still be a drop. So that's one thing to be taken care of. A second thing is, how do you then design the bundles, and how do you go from a product today, a capex product, to more a subscription-based product? And here, typically what you find in B2C is typically a good example. So if you have the luxury as a business to itemize the product features, which you see a lot in software, maybe already a bit less in hardware and even less in industrial machinery. But if you have a base product and options, you could consider, okay, how many packages do I need? Will I come with just one basic product and one gold-plated one with all the options? Should I come with 3 products, 4, 5? And then which features do I put in the base product? And so what are, let's say, the must-have features? Without these, no customer would buy. And that's probably an easy one, right? I mean, you take it's like a car. You would take out all the options, and that's your basic package. The gold-plated one, that's also an easy one. It's basically everything you can think of.
Indeed,
but then, as we mentioned in the beginning, how do we create upsell paths? And so how do we, let's say, make a no-regret move for a customer to go into the basic package? What is then the next step, right? What is the next best offer that we can make them on that product? An option, an add-on, etc. That would then be a second bundle. Potentially a third one, a bit more features, all the way to this gold-plated offer for those with a high willingness to pay. And pricing is one thing. Thinking about, let's say, a penetration pricing strategy on the basic product is another thing. But then the real monetization, bringing customers up the upsell chain, that's the real challenge.
Indeed. And for me, I think that's pretty much where, and I think the more I hear you say this, I'm not saying that it's marketing. Different companies define marketing differently. I am a sales professor, but it doesn't mean that I have to realize that increasingly you need structured marketing to be able to help. And that's pretty much why I think a lot of companies, B2B companies, which do not have now, will move towards companies like Simon-Kucher and other companies to actually help them transition in that process, not just understanding what kind of pricing bundles, but it also comes with change management, right? It also comes in terms of saying, how should I now go about communicating this to my customers? What does this mean for my existing customers who bought a big piece of product? Now suddenly you're coming up with this. So what does it mean for newer customers? What are the ways by which I can make myself, let some customers who in the past said I would not even consider this solution because it's too expensive, but now when you break it down into a subscription-based model, it might look very, very affordable, so that they can have a great quality product which they would normally not have considered. Now they can manage this predictable monthly outflow of what is looking at as well. And of course, finally, your sales organization, right? Because I think one of the things which I've learned from reading some of the books that your company has put out in the past, as well as from interactions with you as well, is that all of this, there's pricing, and this pricing kind of implementation, pricing strategy implementation, which is where a lot of things can go wrong. And I think you can still do all your homework. You can have a deep understanding of the customer. You can create the right kind of pricing, which, by the way, if you have a pricing department, okay, it's not marketing. But if you don't have a pricing department, it should be marketing, understanding what the customer is willing to pay. So, and manage this transition, for me, is the challenge that a lot of companies will have. I'm not saying, I don't think that even companies that are in SaaS exactly know how to price it right, but at least they have experimented and they sort of have an idea about what to be doing with it. Well, anyway, I think I know that your time is very precious. I wanted to really thank you again, Sven, for sharing some insights on this. I'm sure that there's a lot more here that you guys are doing in terms of very interesting work. So thank you for taking the time to talk to me and the audience.
It's a pleasure. Thank you very much.
Thank you. And everybody stay tuned for the next version of our sales webinar series.